As interest rates continue to climb, how is the Omaha real estate market starting to react? That's the question we're going to answer in today's video, and we're going to get started right now. Hi, my name is David Matney with Nebraska Realty. I'm a local realtor here in Omaha, Nebraska. Now let's jump into today's topic. Let's talk about interest rates. Now, in the decade after the Great Recession, interest rates fluctuated between 3.5% and 5%. In 2020, during the years of the pandemic, we saw rates dip below 3%. Now, let's say you purchased a home back in 2018 when rates were around 5%. During the pandemic, you were able to refinance at a 3% interest rate. Now, anyone who purchased a home with a 3% interest rate or refinanced at a 3% interest rate, they're not going to be inspired to sell and go out and pay for a new home at a higher price at a 7.5% interest rate. How does this pencil out? Let's say in 2020, with a loan amount of $400,000 and it's financed at 3% for 30 years, your principal and interest payment would be $1,686.42. Now you contrast that to today in 2023 with a loan amount of $400,000. What is your payment at 7.5% interest for 30 years? Your principal and interest payment would be $2,796.86. This is killing off demand. What we're seeing is fewer homes being sold because of affordability. We're seeing a contraction in the market. Fewer buyers can afford homes and fewer sellers are selling homes. And when you look at closed sales in 2023, the number of closed sales was down 22.3% compared to 2022. However, look back and compare 2023 to 2020. The Omaha market is down 37.8% compared to August of 2020 in terms of closed sales. So we're selling fewer homes, but let's look at the effect on the average sale price. In 2023, for new construction, the average sale price was up 3.9% compared to 2022. The average sale price for a new construction home in the Omaha market was at $496,169. In 2023, for an existing home, the average sale price for an existing home was up 3.8% compared to 2022. The average sale price of an existing home last month was $346,932. Again, look back and compare 2023 to 2020. Prices for existing homes and new construction went up over 24% in the last 3 years. The good news, if you own a home in Omaha, you continue to gain equity and price appreciation. The bad news, if you thought prices were going down and you wanted to time the market, then you were on the wrong side of the equation. As we continue to see affordability disappear, you see an effect on the supply of homes on the market. Below $300,000, we still have less than 1 month's supply of homes on the market. Below $300,000 is still a seller's market. Again, it's just a reminder, 0 to 3 months of supply is a seller's market, 4 to 6 months of supply is a neutral market, and 6 months or more is considered a buyer's market. And here's just a friendly reminder, just because you own a home below $300,000 and you're in a seller's market doesn't mean you can overprice the home. The fall market has a natural decline to it. Fewer homes are being sold. You still need to price it right. In the $500,000 price point and above, we're in a neutral market. It's going to take longer to sell, and you might need to make some concessions. One of the stopping points for buyers is the higher interest rates. Now, as a seller, one thing you can offer is to buy the rate down for the buyer. This gives a buyer an opportunity to buy a home at a more affordable interest rate. Now, we have a shortage of homes at the $300,000 price point and below. So why don't builders just build smaller homes? I mean, it seems like a simple solution. However, it's not quite that simple, and it's for 2 reasons. Number one, in Douglas County, all of the ground that was easy to develop has already been developed. What's left is tougher to develop. which means it's going to take more effort to flatten out that ground, which drives the cost up. And there's a second reason as well, and that's this. 30 years ago, a developer could get 4 to 5 lots per acre. Today, that same developer can only get 2 to 3 lots per acre because more ground has been set aside for ground runoff, which means fewer lots per development. Now, what you'll see in an area of new construction and a new subdivision, you'll see more groundwater runoff collection points. Less ground is available to develop. The cost goes up. Today, the lot alone will run a builder $100,000 before anything is built, which is adding to the cost of building. Speaking of building, what is the current price of lumber? Lumber is now around $530 for 1,000 board feet, which is in line of where we were pre-pandemic. Have we seen an uptick in unemployment rate because of the higher interest rates? In Douglas County, the unemployment rate is lower compared to last year. We are currently at 2.6% compared to 2.9% last year. In Sarpy County, the unemployment rate was at 2.4% versus 2.6% last year. Both Douglas and Sarpy County are well below the national unemployment rate of 3.8%. Should you buy or should you wait? That's the question that only you know what's best for you. If you have a stable job, if you have a long-term outlook, and you can afford the payment, you will be in a better position to go ahead and buy. Now, if you own a home and you'd like to buy a new home, you have another question. Should I sell my current home or should I keep it as a rental? That's a tougher question. You might want to consider keeping your current home as a rental, especially if you have that low interest rate. Talk to your lender and see if that's an option. Then you have to ask yourself, do you have the temperament to be a landlord? Be sure to consider all of your options. And if you want to learn more about the Omaha area, be sure to watch this next video and you make it a great day.